Good evening, everybody. We're going to do some more wide, or not some more, but do some wide screens tonight to kind of go through how to do some simple scanning techniques. And I shouldn't use the word simple because they're all simple scanning techniques when it comes to candlestick analysis. So here's one of the softwares. This is TC2000, and I'm just going to show because I've gotten a new computer here in the last couple of weeks. I haven't even formulated all the different scans because I don't need to, but I'll show you why. So with that, yes, Happy New Year, everybody. And what we're going to do is we'll just kind of show some scanning techniques of how you find the signals and patterns, and then we're going to have to work backwards to say, all right, what signals and patterns do we want to be looking for, and then how do you utilize your scans to find them. So this is what I look at starting every day. First of all, I've got a trading universe up here. This trading universe is basically made up of stocks that are greater than 5 and trade more than 200,000 shares on average each day. That's my trading universe. Now, you can set up your own trading universe. If you're trading just options, maybe you want stocks that trade only 800,000 shares or more each day, so you know you have enough volume to get in and out of the options. If you trade low dollar stocks, maybe your universe is anywhere from $1 to $5. Steve, this one is TC 2000 Warden Brothers. There's a link on our site, on the Candlestick Forum site. This is just one of them, and this is just because I can kind of show the formulation or the rationale. We also have the formulas that go on TC2000, and just everybody should write down on their calendar that on, it's on not this Saturday, next Saturday with Metastock. We also have all our formulas in with Metastock, which is probably one of your best scanning softwares. Greg, if your sound is breaking up, you might have to hit the red X up on the top right of your screen and come right back in again. Okay. So I've got my trading universe. I also have set up over here what I call my bucket watch list 654321. Right now, I've already got 114 stocks in this watch list. Now, not all of them are any good because I've been accumulating them for maybe the last week or so. And every time we do a scan each night, I add more. But then I should have done this today. I'll probably do it tomorrow. I'll go through and sort to see which ones of this watch list are still good. And obviously, the ones down here near the bottom of the watch list may not be any good anymore. So they may not. So I will take them off and start with a smaller watch list and start adding to it. But here's what I do each day. First of all, when we get to the live charts, we're going to see why we would be analyzing whether we want to be buying, going long or going short. I mean, that's a simple analysis of what we think the market is doing. So let's say we are thinking the market is going up. So we want to be looking for long positions. Well, what I do is, and this is a very simplified version only because I can recognize signals and patterns, but over here, I've got my trading universe. You could also do a trading universe with your stochastics, and I'm going to do that. Let's do that. I'm going to go to, where is it? That's a fine howdy do. I want to go to a new easy scan. And I'm going to do it, again, with the same thing, add new condition. I'm going to put all the stocks that are in my universe that I'm looking at, stocks greater than 5. So I go to price per share. Let's see, I want to make sure the drop-down boxes. I want the value, and I want stocks that are trading greater than $5. I guess that would be right there. I hit lock. So this takes my trading universe down from 9,600 to 8,200. Well, there's a lot in there that I don't want because they don't have enough volume. So I come back down here, go down to my volume. On an average volume, where is it? Average volume for 90 days, the value, and I want to have all the stocks that are trading greater than 200,000 shares a day, which on this one will be, right about there. All right, so 200,000 shares per day. Hit OK. All right, that's taken my trading universe from 96, 82 down to 3,200. That's about the right. CB, unfortunately, this one is 2007. The older versions are probably even going to be more simple to work with. What I'm just trying to show here is the concept or the how you just kind of apply the scans to where you set up or find what you're looking for. And this is the most basic, so it's just kind of showing you the ABCs of how to do it, where a lot of that's already built into the new versions. Oh, that's as close as I could get. That's actually 200,000. I don't know if there's a free use. I don't know. Can somebody else answer that? Is there a free? And TC2000 isn't that expensive. If you're day trading, it's like $37 a month. If you want the intraday active one, it's $97 a month. All right, so that's the same trading universe that I have for all stocks. But let's say I want to find the ones that are in the oversold condition. That means I can come down here to my stochastics. I guess it's stochastics short term. And I want the value. And I want to have all the stocks. Maybe it's faster to do this. All the stocks that are, I don't even know where I am now. Less than 20. Way down here. All right, so let's use that number. Oops, hold on. I got Abe sending a message. Okay, I got to figure out how to get down here. Click on. well, this in, oh, there, okay. All right, so now we've got our trading universe and all the stocks that are trading less than 20. So they're in the oversold area. So we want to save this, and we're going to make this, let's say, oversold less than 20. That becomes a universe. So as you can see, here's the top one. I've got this sorted by stocks, this percent stock price of the movement today. So as you can see, we've got an oversold condition, stochastics below 20, and a big up move. So we're finding stocks in the oversold area. So I can go down through that and find ones that might be bottoming out. So, all right, so I'm going to go backwards now. Now, what I do, now, if I want to find all the stocks, whoops, and I want to find the dojis in the oversold condition, I can add the formula for doji. And that you can put on here. Whoops. Cancel this. I don't even have it on here. Right now, these are daily charts. Well, that's up to you. If I'm, and let, yeah, you can change it to any time frame that you want. So if I wanted to see what it was doing on the 10-minute chart today, started right here, and this is what it did on the 10-minute chart. If I wanted to do it at the 5-minute chart, you can see what it did on the 5-minute chart. All right, so here's how I do my transactions. If I'm going through my trading universe, oops, let me get back to daily. I start by having the biggest percent move on my trading universe, and it looks like this one, SES, did a big gap up after a left-right combo. For whatever reason, I don't know. I'll come back and look at it. So I flag it. I can look at this one. Big percent move today, except it's already on its way. The buy was down here somewhere. This one's got possibilities. Those are the J-hook type pattern at the breakout level. This is about all the amount of information that I need right now. I'm just going to mark it and come back and look at it a second time. Another one that's done a nice breakout. This one would have been on a watch list that if you were looking at a T-line crunch, you're looking for the breakout. Oops, I'm trying to see where little rings keep. Oops, hold on. There's our, we own this one and we had a nice J hook, so I won't mark it because we already have it. This one, another J hook type pattern, so I'll click on this one. So I go down and here's another breakout. So I click on that one. There's a scoop type pattern. I'll click on this one. I think you forgot to save your universe. Oh, if I did, yeah, don't worry. This is just the trading universe without the stochastics being in the oversold area. And the reason I'm doing this is I'm not looking for just the stocks that are right now in the oversold area. I'm looking for the stocks that had the biggest percent price moves. I can recognize easily a scoop type pattern. So I don't need to have it more refined, looking for stocks in the oversold area. You don't know what the gap ups, Roger, are from. They can be from anything. They can be from a contract. They can be, anything that would all of a sudden get the enthusiasm to where they're gapping up the price. It could be earnings. It doesn't matter what it is. But we don't care what it is. All we're really interested in is seeing which ones are, POTUS Twitter. All we're interested in seeing what the reaction is from on that chart. So here's a kicker type signal. So I'd click on that. There's a J-hook pattern in Weibo. So once I've gone through this process, now as you can see, there's 3,100 or 3,200 stocks in this universe. Obviously, the good ones or the biggest percent movers are up here at the top. If I go all the way down here to the bottom of this list, this is the biggest percent loser today. And those aren't the ones that we're looking for right now in a bullish market. So just to speed up things, because I've already done searches for some good stocks already, this is pretty much how you can, Las Vegas Sands, there's a nice scoop. So I might find, on a day like today, obviously, I might find 30, 40, 50 good stocks. Jake, yes, that is one of the criteria, provided the market is bottoming out. So the criteria for a signal is looking for a signal that's occurring. Let's find something that's more precise. Signals that are in the oversold condition. Yes, this is being recorded. Now, what is the fallacy of finding stocks in the oversold condition in this market? Well, obviously, this market's been in an uptrend for quite a while. That's pretty much telling you if you've got a stock that's in an oversold condition, something's wrong. So what are we looking for when we're going through a search real quick like this? We're looking for patterns, like a J-hook pattern, and I'll get to those. So the reason I wouldn't be looking for stocks in the oversold condition right now is because the market's been steadily up. I'm looking for ones that have moved up and now doing a pattern and getting ready for the next move. Now, once I've done this, let's see, I kind of slid down here. All the ones that I have hit with an X and flagged, I'm going to copy all the flag signals to my bucket watch list of watch list 6. Oh, that would have been my next criteria. Let me go here to watch list 6 and add all those. Okay, so remember, in this category where we had our trading universe, now we also have an additional criteria with all the stocks that are in the oversold condition. So that's another criteria. So my trading universe is just all the stocks that I'm looking at. The stocks that are in the oversold condition is my trading universe with the additional criteria that that they're below 20. Your webinar platform is super choppy, already relogged in a few times. All right. Sometimes it's your server. Yeah. So sometimes it's the server that might be having problems on any given day. Okay. So now I've added those to my my watch list 6. So I unflag them all, and this is where I start what we're going to be doing tonight. So I've done my scans. Now, as I mentioned before, you could take this scan, oversold stocks, with these criteria, and then say, for example, you wanted to add another criteria, which is the formula for the doji. So that would be your trading universe, stocks in the oversold area, and had formed a doji in the oversold area. Now you're watching for a positive open the next day. Or you could add the bullish harami, whatever signal you wanted to in here, and then you would have a list of those that would show up in this category. And the reason I don't have them on here is because I just got this new computer and I haven't redone everything. But you have your trading universe, you have your oversold 20, then you might have oversold doji, oversold hammer. So anyways, that's as simple as the scanning technique. Now, for me, it's relatively simple because I can look at these charts and visually see instantly which ones I want to start going back and reanalyzing. So as I go down through this list and I want to look at something else, yes, Gary, these scans are in Thinkorswim for free. Now, some of our formulas, let me do this. Hold on, I'll get to Thinkorswim here in a second. So now I forgot what I was saying. So I go down through here, and I might go through this list. Now, as you can see, I've got 121 on here, more than likely. Now, here's what I try to have people kind of refine their training to. There's about 18, 20 different high profit pattern setups. Best friend, the left-right combo, the kicker signal, the fry pan bottom breakout. What is the scan criteria condition for a doji? That the price opens and closes basically at the same level, and there's Katie, there's a formula for that. As a matter of fact, there's probably enough people in here that could just copy and paste that formula in here right now. Yeah, and that's the ultimate doji, is the open and the close are equal. But as you can see, these are doji type days, and you can see they're not quite the same, but they're close enough to tell you there was indecision between the bulls and the bears. So let's just say hypothetically, I'm going to pick out a few here that could be ones to look at again. And I'm just clicking on these real quick. Now, let's say I've clicked on 20. There's going to be a point where when I get further down my list, they might not be good trades anymore because they've either already moved or they're what looked good at one time may not be as good now. So what I do is I come up here and I copy all those up to watch list 5. Now watch list 5, let's say I've narrowed down, I've got 8 on here that I clicked, but let's say I've clicked on 22. Now I do the same process. I go through here and say, all right, out of these 22, now I've got it down to these 8. Now I go through again and I pick out maybe 5 that are, whoops, I didn't do that right. Let's say I pick out these 5 that are the best out of those 8, do the same process, move them to watch list 4. I didn't do that right. Copy these up to watch list 4. And let's say out of that batch, I decide that these 3 are going to be the ones that I want to look at as my first picks tomorrow. The book is on our website, a lot cheaper than Amazon. And if you have trouble finding it, just email Abraham at candlestickforum.com and he'll get you the link. Yeah, so it's we sell it a lot cheaper on the website. Okay, so now I've picked out 3 that I'm going to recommend tomorrow. Well, what happens tomorrow if this one opens correctly, this one opens correctly, but this one opens down here? Well, then I've got another one to look at to see if this one's opening correctly. Or, hypothetically, let's say none of these open correctly. Now what do? Now I can go back up to watch list 5, which there's a bunch more that were the good ones, and see if you see if one of those is working. So the nice thing about this scanning technique is not only are you identifying the best trades provided they open correctly the next day, but if they don't open correctly the next day, you haven't run out of ideas. You back down to the next best ones and see which ones of those are opening correctly. Now I'm going to flip over here to, whoops. I thought I could do this cleverly and I didn't. So Thinkorswim, we've got the scans on here, and I don't know what I did. I hadn't gotten this set up yet. So that's just to find how they do. We've got scans where you can buy the best friend signal formula, the left-right combo, the kicker signal. And so I don't even know what I've done. I should have, oh, here it is. Custom. Edit, crossover, study. Let's say I want to find the best friend signals. All right, so I think I've done this. Add condition. I'm just trying to go through this real quick. Save. Bah. Okay. Okay, there's the best friend signal. Let's see if I can do a scan for it real quick. Okay. Just, so now what you can do is you move this list over here, and then you can go, what is this top one? SSV BC. So if I put in SSVC, apparently a fairly new issue, it's showing you kind of a best friend type signal. These are, yeah, there's the basic studies in Thinkorswim. Let me see if I can get to them again. Yeah, so there's all the bullish and bearish candlestick patterns. There's all the different patterns. You don't need to have all of these. You probably only want to look at a few like the doji, engulfing, harami, kicker signal. The rest of these don't occur often enough. Or just the bullish ones might be your morning star signal. Are these popping up correctly? Yes. And there's, yeah, your piercing signal. You should also have dojis on here. But anyways, all these formulas are already in Thinkorswim. Now the specialty formulas, which we said were like your best friend. I think there's the left-right combo. So there's some of these specialty ones that you can buy. Now, what I do is if I'm scanning through this process, I might take a look at the first 4 or 5 to see which ones came off a best friend signal and had the biggest percent price move. Now, this whole process takes maybe 3, 4, 5, 7 minutes to do. Tom, can you hear me now? Okay, so let's go one step further. Let's analyze what happened today, or how you could be prepared for what happened today. We know there's very simple logic to the to using candlesticks as far as identifying what the investor sentiment is. I may make this much smaller to show you what the long-term analysis would be. Make this even smaller. Whoops. Maybe I need to move this to, well, this looks better on weekly where we can see it. But we can see what happened. We had a wave 1, wave 2, and then when it broke out through this area, wave 3. Now we knew it was breaking out into new territory because of the things we could add to our analysis, like a J-hook pattern. A J-hook pattern that was happening right up here near one of the resistance levels. And if we have a J-hook pattern, what do we expect out of wave 3? We expect wave 3 and wave 1 to be the same. And if we can see that, we know that if wave 3 is going to be in progress, that it's going to break out through this level into new high territory. I'll get to, Jake, we'll get to those here in a second. Again, that was just a quick, and this is what we'll get to right now. Is how do we determine which ones are better than the others? So give me a minute. We're getting there. So what was our first analysis this morning? I mean, we were all waiting to see after the first of the year, what everybody was going to do. But we had one criteria that, for those of you folks that are new, we've got the moving averages on here. The 200, the 50 are simple moving averages. The 34, it works relatively well. It's an exponential moving average. But the black line is what we call the T-line. The 8 exponential moving average. It's the trigger line or the trend line. And there's a very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. Well, as we saw in this last move, what's the one thing right up until, what day was it? Tuesday, had not happened in the Dow. They hadn't closed below the T-line. And we know the probabilities, just from using the T-line for years, is that statistically, if you can't close below the T-line, that means your probabilities are that you're still in an uptrend. As soon as you close below the T-line, the probabilities go the other way, that you're probably going to see more downside. So when we woke up this morning, and they were already talking on the financial news stations that the pre-market futures were up, forget what it was, 120 for the Dow and something big for the NASDAQ, we knew right away what was happening. They were staying above the T-line. Now, did we expect a magnitude of 330 points in the Dow? Definitely not. But what we did expect was that the market would continue to trade positive. Now, when I say that, when we know the market is going to trade positive, at least we know what direction we should be heading in. And that's up. We didn't necessarily know whether it was going to be up 85 points on the day or 330. The benefit, though, is if we know the direction, we have ourselves in positions where if there is a big move to the upside, we're participating in it. So if you kind of add that to the analysis of the NASDAQ, notice what the NASDAQ was telling us. They couldn't close this below the T-line. They opened lower and traded back up above the T-line on Tuesday. Now, we knew which direction they would be heading based upon how they would be opening today. If we woke up and the pre-market futures were showing that everything was, there's your stochastics right here. Oh, stochastic settings are 1233. I don't know why they're not showing up here. But when we saw the market was opening positive today, we already had a very strong probability that the markets were going to trade positive. So now back to Jake's question. How do you know how to find which ones are better than the others? Well, there's two categories. One, if you want to learn all the candlestick signals and patterns, we've got a list called the top ranked signals and patterns. There's about 18 of them. Did you buy right at the bell? Yes. Or within the first few minutes. Now, not everything is an immediate buy. You want to see what's happening. And let me get to those. let me go back and reiterate or make sure this point is clear. That we've got a very strong indication based upon what the signals are telling us at the T-line to know whether we're still in an uptrend or whether we're now in a downtrend. So you would close around December 1st. Yes. If I had long positions now, not necessarily the market, or if I was trading the market, yes, I would have closed positions that had uptrends and were also closing below the T-line. So now, does that tell me that all my trades are done with? No, if I closed out some positions, I can still do my scanning over the next few days when they came back up above the T-line to see which stocks were the best ones to be buying at that time. So as soon as we closed below the T-line, the probabilities were that we were heading lower. Let's see if I can find something. As soon as we closed below the T-line, the probabilities were that we were heading lower. So that is just a very simple statistical analysis based upon, and I tell people, if you don't want to take my word for it, put the exponential on your chart and see how often that result occurs, that if you're above the T-line, you're going to be in the right direction. All right, so now let's go to our individual stock positions. SP, I don't know whether they were the best ones. I would just use those as examples. So here's what I would be doing. Now let's first of all, I'll get back to the ones that I think are going to be the best and how we got there. Let's see, something else just came in. All right. So if we saw things opening positive, we were already prepared because of scans to see which charts look the best. So there was a morning, this is Western Digital. We'd been trading this one in the options room and did some consolidation, closed out some of the position, and then look at the Morningstar scoop type pattern with the additional SP. I'll show you the ones that look good. What was I saying? Oh, Morningstar signal with the other support observation that it hit the T-line and bounced back up. Now, when I point that out, why is that relevant? Because statistically, nobody has the T-line on their charts. The T-line acts like a natural Fibonacci support and resistance level of human nature. So when it moved back to this level, it didn't move back to the T-line that everybody had on their charts. It moved back to this level that to everybody else, that was just where it bottomed out. To us, we could see why it bottomed here because of the T-line. So I don't know whether I've said that clearly. Nobody has the T-line on their chart. So it didn't bounce off a level that everybody was watching. But we've got the T-line to act as a high probability trend indicator. Once again, it uses the T-line as a natural support and resistance level. So this is the one aspect that I constantly profess when I'm doing training sessions, that if candlestick signals are the graphic depiction of what's going on in human nature, and the T-line acts like a natural support and resistance level of human nature, When you combine those two, you've got an extremely powerful, high probability trade setup. Yes, the T-line works on all trade setups. So here's, let me get all my points made here. When this opened positive, what type of pattern was it telling us that Western Digital was setting up? A wave 1, a wave 2, morning star signal, scoop type pattern, support on the T-line, breakout wave 3. What's wave 3 tell us? Wave 3 is probably going to be the same magnitude as wave 1. Yeah, J-hook, high probability trade setup. Now, should I have been buying here, 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 or here? Well, that's where you can go to your 10-minute chart. So it popped up, hold back. So if I was buying right in here, or here, or if I missed it, but I knew that it was a breakout and saw there was pulling back, pulling back, pulling back, maybe I'm buying right in here. Because what's that telling us? They didn't get back below the open, and now they've had a gap up, a pullback, and now they're buying again. And how long were they buying? All day long. They couldn't close it back below the T-line. So yes, if I'm trading futures, for example, today I was trading soybeans. So here's my 10-minute chart. I'm buying it, I guess it opened right about in here. So I'm buying, I'm holding, I'm closing out that trade. I'm buying right here, I'm closing out that trade. So they work just as, remember, candlestick signals are the cumulative knowledge of everybody buying and selling during a specific time frame. The signals will occur the same as on a 1-minute chart, a 10-minute chart, a daily chart, or a monthly chart. So if I'm trading soybeans, my first analysis is which way are we going? Well, it looks like we're in an uptrend. So that implies that if I start seeing buying early in the day, they're continuing the uptrend. I'm probably going to be trading in a bullish bias for the day. Oops, now I've gotten way off track. Now, let's go back to Greg. Yes, we have our regular trading room is open all day long, and that's for people that are trading stocks, learning the candlestick analysis, seeing what everybody else's ideas, where you can ask questions. Wouldn't you get whipsawed by doing this under certain conditions? Yes, Jake. And if you're getting whipsawed, what's that say about your trend? It's telling you after maybe 1 or 2, 3 times of being in and out and you're not moving, stay away from it. You can see that the trend isn't going anywhere. Go on to something else. So back to you, Greg. We also have an options trading room. And the reason we have an options trading room is because the terminology for trading options obviously is going to be much different than just trading stocks. So the main room is learning stocks, the signals and patterns, and then the options room is formulating the best option strategies that go with certain or specific trends or price movements. So where was I? Okay. Western Digital. So if we're looking at this and it gapped up, I may wait 2, 3, 5, 7, 10 minutes to make sure they're still trading at positive. Today we recommended CATM, but look what it did. It opened up, kind of bobbled around, and then sold off. That didn't have enough strength there to tell me they were breaking out. Now, if it closes, trades here, and comes down here, what do we already anticipate? Well, we're in a fry pan bottom, and we're getting right here at the breakout level. What do we need to see? Oh, yes, it's another subscription David, if you will email Abraham at candlestickforum.com, he'll tell you the fees, the conditions, and that sort of thing. Yeah, you want to see positive trading, but if it comes down here, now what becomes an excellent entry point? Well, if they come down and use the T line as a support and come back up through the open, that told you they consolidated and now they're ready to break out. So there's very simple logic to getting in or not getting into a position. So not only do candlestick signals tell you when there's a high probability of getting into a trade, but we were ready to buy Derm today on positive trading. Well, it opened, didn't show anything. Now, where's our entry point? Well, notice they came right back to the T line. If they come back up through this level, what type of pattern do we have setting up? A J-hook pattern. So it didn't execute today, but it might be executing tomorrow. And same type of situation over here. We were right at the breakout level. And when it opened, this one opened positive, or opened today and immediately sold off, told us that we don't want to be in this one. It's not breaking out. Would you have sold that today or wait for tomorrow? Would you have sold that today? Which ones, JJ? Any of these? No, I probably wouldn't have bought those last three today. Yeah, CATM, when it opened and didn't really move, yeah, I'd rather pay up for something, knowing that it's moving in the right direction, and try to catch it absolutely. So I'll sit and wait, like we saw in Western Digital today. I didn't get into this one until later in the day. I bought some on the open, and then I'm thinking, oh man, it's pulling back. What did I do? And then it started back up again. But I wasn't too concerned, because if they gapped up, market was trading positive, and they pulled back, it was just profit taking, and more than likely this pattern was still working. So you probably had a chart that looked like this. Who was saying that? Somebody say, oh, you bought Twillo. You might have had a pattern like this, where if you closed it out, yeah, maybe you got back in today, or if you didn't close it out, it had to close positive the next day, which it did. And with it closing right on the T line, now you have a game plan. If it had opened lower today, yeah, it would have closed out the position. Let's see. So here's what we're looking for. Again, here's our best friend on Michaels. Now, on a day like this, do you buy here, 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 or here? That's where you go to your 10-minute chart and see what's going on. There's a statistical probability that after a big, huge day, if it opens and trades lower, close out the position. You can always buy it back if it comes back up through this level, meaning that level right there, because that tells you the profit taking's over and the strength of the best friend signal is now in progress. So we were buying again. We bought here, closed it out. Bought again over the last couple of days. All right, so the reason we tell people that if you don't want to overburden yourself by learning all 18, 20 signals, you want to learn the signals themselves. There's 12 major signals, 6 long, 6 shorts. Those are the ones that give you all the information that you're looking for as far as what's going on in investor sentiment. There's about 6 or 8 patterns, one being the fry pan bottom. Looks like a big fry pan bottom. J-hook pattern, cradle pattern. Now, you might not want to try to learn all of them, but if you know the signals and you at least recognize the patterns, pick out 4 or 5 that you want to specialize in. That's what we're kind of preaching, is to teach people how to specialize in 4 or 5. Now, I can pretty much guarantee you that if you specialize in 4 or 5 signals and patterns, knowing exactly what to do, when to do it, what should happen, where you should be in, where you should stay in, and when to get out of a position, you're going to have more trade setups than you're going to be able to handle. So you'll still be at that process that you have more signals or more trades that you can look at or participate in. So you're still going to be going through, even though it's a much smaller group, you're going to be going through a very selective cultivation process to see which ones are the ones that you know well are the best ones to get into. The whole basis of candlestick analysis is that every time you see a pattern or a signal, the Japanese rice traders have shown us statistically, I guess not statistically, I guess statistically, but on a probability basis, there's going to be an expected result. Now, I consider my results about 70% positive, which is extremely good. But the one thing that you want to always remember is, even though if you've got a good trading program that has 70% probability of being correct, you still have to know what to do with the other 30% when to come right back out of a bad trade. When I was stuck to the entry rules, AG and oversold with patterns closing by the T line, I've been a winner. Okay. All right, so Fitch was one that we recommended because notice how it broke out over the last couple of days. There's your fry pan bottom. There was your breakout area. And now what do we expect out of a fry pan bottom? A very strong price move. Apple, let's make this a little bit concise. Kind of a fry pan bottom setup, and when it broke out into wave 3, what do we expect? You stay long until you see a candlestick sell signal. Now, today it gapped up like many others in the overbought area. So, the same scenario of when to get into a position, you want to know what to look for to get back out of a position. So remember what the Japanese rice traders' basic analysis or basic philosophy is. Where do most people buy? They buy exuberantly at the top. So if I see an uptrend, stochastics in the overbought area, and they've gapped it up, where's my first logical stop to protect profits? Right here at today's open, because logic says if there's enough selling pressure with the price moving a little bit away from the T-line in the overbought area, and they've gapped it up, they better not bring it back down through that open. That tells me the sellers are now coming into place. MAXR. This is an excellent place to start buying calls because the probabilities are you're going to be heading higher. So I'm going through some of the ones that we have already participated in because of recognizing the trend. Notice the kicker signal back up above the T-line. Notice the belt hold signal. And remember what our belt hold tells us. First of all, the kicker signal is your strongest individual candlestick signal. Tells you the investor sentiment's been kicked in the opposite direction. We know what the belt hold signal tells us. Got bulls and bears, bulls and bears, bulls and bears, and then bam, all the bears come out. The bulls sop up all that selling pressure. Now there's no bears in the way. Any buying from there is going to be extremely strong because there's less sellers in front of you. We're still looking for this. Look at our hanging man. We're not quite in the overbought area. So what else could we be looking for right at this level? Well, if they open this positive and do a bullish doji sandwich breakout, What's that tell us? Probably we have a lot more upside on this movement. Things like whiting. Oops, where did all these lines come from? Another one with a bullish engulfing uptrend. What do we do on something like this? Very simple. All we can do is stay long as it doesn't close below the T line. Would you have stopped out on the belt hold signal on EM? Jake, if you had put your, now, if I'm sitting here watching it, if you stopped out for some reason, yeah, you can always buy it back. So this is why you want to know what this signal tells you. It opened down here, waffled for a few minutes, and then what color was your candle as it came back up through the open? Green, green, green. So what was this telling you? There were buyers in here after the open. So even if let's say hypothetically, I got stopped out here. Now in this case, knowing that they gapped down and I can't remember whether they reported earnings or something. They reported something. So I'm saying, boy, let's get ready to get out. But by the time I got ready to close out the position, it was already turning green. So what type of signal could I possibly expect when the buying was coming in? The belt hold signal. So I was happier than a pig in doo-doo to see it close back up above the T-line. What'd that tell me? I've got a lot more upside. Look what your day trade would have been 2 days later after your bullish doji sandwich. When it got up here, that far away from the T-line, what was the thing that you needed to do? As a matter of fact, I think it actually opened up here and then came back down. So this, on the other charts, this is a big dark candle. Yeah, take a look at your 10-minute chart. But I think this opened up here and quickly came back down. But notice the other thing that this didn't, yeah, that was a big red candle that day. What didn't this do? Never closed below the T line. So what did that tell you about your trend? You're still in an uptrend. You buy once it trades above the T line. Yeah, if I had stopped out and I saw they were closing back up above the T line, maybe I didn't buy that day, but I probably would be buying the next day or the next day, knowing that now I've got a bullish engulfing, left-right combo belt hold, following the kicker signal. Yeah, what's that whole scenario telling me? The bulls are still pretty strong on this one. So I'm not trying to figure out why things are happening. All I'm doing is figuring out what is happening. And this signal right here tells me the bulls are still in control. So here's one that's a little bit in doubt. Bullish engulfing signal. Nice move on Tuesday. I think that was the day we recommended it. Day it came back here and closed right at the T-line. So now we know what our game plan will be. Very simple. This one has to open and trade positive to stay in it. If it opens lower and starts trading lower, what can we assume? That we're now in a downtrend and we're not in this uptrend. So this is part of that process of knowing when to close out a trade that's not working so that you can move your money back to something like this where you know you've got a strong move in the right direction. So one of the biggest learning, what did I do wrong here? LTX. One of the biggest learning criteria that I had to go through was thinking, oh man, candlestick signals work great. Learning when to take my profits or learning when the signal didn't work so I could move on to something that was working. Oh, Thinkorswim, I think, is free, Greg, if you have your account there. Thinkorswim is a trading platform that has charting software on it also. Would a good strategy be to put in a buy order 1 or 2 percentage points above the T line? Percentages don't mean a thing. We're not buying percentages. We're buying what the chart is telling us. Or was that GTT? So it doesn't matter what the percentage is. If I see this open and start trading positive, I'm going to stay in it. If I see it open lower and trade lower, I'm coming out. Yeah, these signals are all over CC2000. I think we sent our formulas to them many years ago. Oh boy, I'm keeping you all way over time. We haven't even gone through. Let's go through these. So here's why the buys are very identifiable. In the overbought area with a candlestick sell signal, a bearish engulfing, where do you think the first target's going to be? Right back to the T line. So you take your profits, or you close out the position. You could always wait to see if there's a J-hook pattern setting up. Yes, Greg. Toss has a lot of the basic signals, and then the more technical signals like the best friend, left-right combo, those type of signals. We have a package that is pretty inexpensive that you can buy and just download them onto your Thinkorswim. All right, so J-hook pattern on Western Digital. Apple, we recommended calls right about in this area with the idea that when it broke out, you were in an uptrend. Let's make this steeper. Amazon did a J-hook type pattern. And notice where it supported. Came up through the 200, which was acting as a resistance level. And what's the normal trading reaction? Once they break through a resistance level, they'll come back and test it to see if it's going to act as support. You could see that it did that with a doji hammer type day right at the T line and the 200, opening positive. What do you think our analysis is? Broke out, did a J-hook pattern. Amazon's going much higher. This works for Forex. This works for anything that has fear and greed in it. Now, Forex is harder because it's a constantly moving price move. But if you break it down into segments like 1 hour or 30 minutes, it works works just as well. You won't have the gaps. And so there's your J-hook pattern on NVIDIA. There's your J-hook pattern on Netflix with a Morningstar type signal. So if we're looking at this, thinking about buying, what's our evaluation? Wave 1, wave 2, Morningstar signal support, wave 3, the same magnitude as wave 1. What's a likely target? Right back up here to the top of this trend channel. Oh, MA, I don't know. I don't know whether we worked with Schwab at one time and they just didn't get it. So you might ask them. And if they don't, you might ask them to get a hold of us and we can see about getting formulas to them. Facebook, above the T line. Okay, so let's try to go through this pretty quick on some of the good charts and why they're good charts. So you got NVAX, series of dojis. Remember, if one doji means indecision, a series of dojis means greater indecision, and now they've told you what their decision is. I would suspect at least a price target up here. Rama, hold on to your individual ones. Let me get through all these just to show you some good ones. There's your fry pan bottom breakout on SNCR. So this is also a case where if you've got this on your list, your watch list, you can see the T-line crunch. Notice how they couldn't close this below the T-line as it crunched the price right up into the resistance level. This is what usually happens. But if you can see the pressure building up, you can be buying right here. Because what's everybody else watching that doesn't watch candlesticks? They're watching to see what happens at major moving averages. They're all piling in after that. Oil surging, okay. AH. Yep, popped up pretty strong. All right. Shanker. So this is what, which one was it? Forget. Oh, SNCR. So you just, yeah, but notice it opened here and went this way. This opened here and went this way. That's a different, pattern. AAXN, there's your fry pan bottom setup. If I was buying, I'd be more apt to buy if it opened positive and broke through that level, just because that tells me that's where the last resistance level is. Here's another fry pan bottom, ARLP. If this opens positive, what's it tell you? Everybody and their brother is watching what's happening at the 50 is going to start piling in, giving you a probability of a strong up move. So if you concentrate on specific patterns, like the J-hook pattern, that's what you can see happening here in Micron. Makes this very simple. This starts trading positive, wave 1, J-hook pattern, wave 3. Diebold, J-hook pattern, scoop pattern. Look for more upside. TLRA, J-hook pattern with a bullish Harami gap up. That's telling you there's a lot of strength coming in this one. Weibo, look at your little J-hook pattern breakout. Next target, at least up here, fill in the gap, and then possibly all the way up to the recent highs. So this is why I recommend people learning specific patterns and concentrate on what they should do. Yes, AK, if you need to, email Abraham or Jim. Yeah, you let them know how they can get a recording. IIVI, J-hook pattern. If this goes through the 200, more upside. CAAP, J-hook pattern with a doji sandwich bouncing off the T-line. If it opens positive, what's that tell you about the 200? Not acting as resistance. Wave 1, wave 3 could take you much higher. Now, does that mean that's necessarily going to happen? Definitely not, but the probabilities of that happening based upon reoccurring human nature doing specific patterns, at least you've got a target that you can be watching to see if it's doing it. And what's the most important criteria for getting back out of a position? Seeing a sell signal, not necessarily having a wave 3 or a resistance level improve or go to the exact target that you're looking for. Look at Marathon. This is what we call a bobble, which is a J-hook pattern that you can see the obvious resistance level. And look at our doji sitting right smack dab on the 200. So this is what we call convergence analysis, or 2+2 analysis. Bullish engulfing, failure at the 200, came back up. If it opens positive, what do you got going on? Potential of a doji sandwich. What's a doji sandwich tell us? There's more upside. What does a bobble breakout tell us? More upside. Just an extremely high probability trade setup. And now that we see what oil prices are doing, there's probably a good probability that some of your oil stocks are going to move pretty hefty tomorrow. Momo, kicker signal. Now, if this opens positive, what's it telling you? They're breaking this downtrend. They're breaking through the 50. That kicker signal is your strongest individual candlestick signal. It basically tells you the investor sentiment has been kicked in the opposite direction. Now, a true kicker signal is you want a big candle to the downside and then a big candle that gaps up above the previous day's open and trades positive. But it's a strong indication that there's been a change of investor sentiment and a good, powerful change of investor sentiment. WABA, look at your J-hook pattern starting off with a kicker signal. Just that double confirmation that there's going to be more upside. I've still got a few more here. Everybody hanging on all right? I've probably got 10 more minutes yet. Gary, all the stocks that they came up with was basically off scanning my trading universe for the biggest percent moves today. That I can recognize the patterns based upon those strengths. All right, so there's a J-hook pattern in WABU. If you trade channels, you can see where your support level is. You can see where your resistance level is. There's another peak over here. At least you can calculate where your next target is. Now, it might not be a big percentage move, but it's probably a high probability move where you might do a spread versus just buying the stock or buying calls buying calls outright. XON. You can draw a line right through the bottom and right through the top. So there's your likely target. Jake, you use the T-line and the stop loss if you're trading close to the T-line. I'll find a few where that. So if I'm trading up, hugging the T-line, I don't want to see it close below the T-line. Now, the further away I move from the T-line, I'm more apt to take profits based upon selling, anticipating they're going to come back to the T-line. How do you control risk on trades where we've gone up 5 to 10% in a day prior to buying? That was the signal. And this is why I tell people what you're trying to learn is not the fact, what was it? Not the fact that you were up 5, 10, 15, 20% on a day like this, because that was the signal. Now, what's your risk reward? Well, the risk factor is I could turn around and close back below the T-line. The reward factor is we know what a high probability result is from a kicker signal. That if we see more buying, we're in an uptrend. So just because the stock's up 3, 5, 10, 20, 40, 80%. Knowing what the candlestick signals are telling you alleviates that hesitation to get into a good trade just because it's already had a strong price move. Now, not every trade you want to get into with a strong price move means that's a good trade to get in. What we want to see is that the price move is following a pattern or a signal that tells us that this has been a reversal. So if I'm looking at a breakout, a doji sandwich, kind of a fry pan bottom, this we call a dimple because from here to here is usually about equivalent from here to here. So we know right about where this breakout should occur. So we will be doing a session. Oh, I think we did a session, did we? I can't remember now. On the different breakouts. Ballard Power. Gap up. There's your fry pan bottom. There's your halfway point. There's your breakout. What's that tell us? Probably more upside. So utilizing the breakouts, LX. Oh, we did LX. Going backwards. Cena was a kind of your scoop pattern, right off the moving averages. Notice what you have here, a big island reversal, meaning you can draw all the way around without touching anything because there's a gap here and a gap here. That's usually a strong indication there's going to be more upside. EE. You can see where the resistance level was. Now you've got basically a doji sandwich, implying there's going to be more upside. The dimple usually happens about halfway. I'll see if I can find another chart to show that. But it kind of acts like a measuring. Now here's one that you want to be able to specialize on. We know that this is a very strong price move. Now it was up over 100% today. You buy a stock that was up over 100%, well, if we know what should happen on this type of signal, I think down here, look at your little left-right combo, a doji followed by a bullish engulfing, followed by a gap up. Now, if you learn these, because they're going to produce big price moves, what should we see the next day? More positive trading, a 45 degree, and where would we put our stop loss? Only at today's open, because logic says if it opens positive and comes back down through that level, there's profit taking going on. Lou, no, we don't pay attention to what the pre-market futures are showing right now. What are they showing right now? Oops, pre-market futures dropped 100 and there, yeah, down 100 and. But remember, that's right now. Tomorrow morning, they may be up 200 points. So, and that's why after earnings, you see the price move after hours way up or way down. Don't pay attention to that, because if you've got something like Apple that trades 6-7 million shares a day and they announce earnings and it's flipping all around, it might be flipping around on 20,000 shares after hours versus the millions that it trades during the day. The important part of seeing where it's going to open is usually about 10 minutes before it opens. That's where everybody's putting in their orders to buy and sell. Now we're looking at NERV because that is about at a breakout level with a J-hook pattern. So this is what we want to be conscious of, is where was the breakouts and what do we expect after that breakout. That's Sedge. And SIQT. Here's your slow curve breakout, your doji sandwich that went up through the 50. Where do you think your next likely target's going to be? Probably up here filling this gap at least, So you know at least you're probably heading in the right direction. So I'm constantly looking for the high probability trade setups. Another buy, scoop type pattern, close right at the 200. If it opens positive, what do we got? Kind of a convoluted bobble breakout. Where's our next target? Well, it could be anywhere up here. Roger, I don't think so. No, I'm not sure. I know that you can buy or sell options up to 5 minutes after the close, but I'm not sure about before the open. And I never try to because I usually want to see what's happening to the stock after the open. PD, another bobble breakout. Wanting to see what's happening right here. So if it opens positive on a slow curve bobble breakout, tells us there's no resistance level there anymore. For those that trade wedges, you can see the wedge formation with a bullish engulfing signal. What the heck is that? You don't even know how to get rid of that. But left-right combo, you broke this level. That tells you got a high probability this is going higher. What's that? Yep. Give me 4 more and I will go through that. AMD, you can see the J-hook pattern. I'm pulling this one up because a lot of people like to follow AMD. Intelsat. You can see the big fry pan bottom. You're right here at this breakout. If it breaks out, what do you got going? Well, you had a big column. That's where you could start running rampant to the upside on this one. So what I'm looking for is the patterns and the ones that have big potential. Now, if there was a lot of overhead right here, may not pay attention to it, but it doesn't look like there's any great overhead until up here. So that looks like about an 80% upside potential. Okay, thanks, Gary. And one more, VC. There was your inverted hammer. This is one of the 12 major signals. And this is one with my own statistics through the years. But if you see an oversold area, inverted hammer has a tail 2 times greater than the body and opens positive, you've got a 95% probability or greater that you're going to be in an uptrend. So these are the type of little things. So what are the best signals and patterns? Again, we've got the top ranked signals and patterns. The best friend, which is your doji gap up. I'm trying to think of your doji gap up. The left-right combo, which is a doji followed by a bullish engulfing. The fry pan bottom breakout. Fry pan bottom. I'm going to go back to. Well. Trying to find the ones that had. Trying to find the ones that had the dimple in them. What did you do right before VC? That was Intelsat, right? Big fry pan bottom. Roger, my volume has already come into play because the scans that I've done are already stocks that trade at least 200,000 shares a day. Now, as far as volume for price move, doesn't make any Doesn't mean anything. However, let me try to figure out one. If you see volume, I'm trying to think of one. If you see volume, let's say this traded normally 1.5 million shares a day, then all of a sudden on the day of the signal, or the day before, or the day after the signal, you see that it trade big volume. That's just another confirmation. It's not a reason to go after it. It's just confirming the fact that there's probably been an exchange of a lot of new ownership in the stock. Now, a lot of people say, well, I'd like to see volume increase as the volume increase. Volume and price have absolutely nothing to do with each other. If there's some good news on a stock and nobody's willing to sell it, it's going to go up on lower volume. So the advantage we have visually of knowing when to buy and how to hold and when to start getting warning signals for taking profits. I say this because at one time I was the worst investor in the world. I was even a stockbroker for 8 years. And I got discouraged because there was nobody out there that you could go to, analysts or other brokers, that knew what made prices go up or down. Using candlestick analysis and whatever other trading program you like, whether it's Hubert's or Steve Price, any of those, anybody that's got a good trading program, if you overlay it with candlestick analysis, you're going to be able to see the buying and selling much more clearly. Oh boy, I've kept us way over time. With that, everybody, thank you for showing up tonight. If you need more information on the options room or buying the books, just email Abraham@candlestickforum.com. He'll get you the info. All right, everybody. Snap had a nice little breakout. Bullish engulfing, gap up. I would expect more upside. Okay, everybody. Happy New Year. There's going to be a lot of good money made this year. We'll see you then.